Hey, what's up guys? John here. Used car prices are crashing in America.
On average, prices are now dropping.
Used EV prices are falling.
Used car prices are down on average.
And auto loan delinquencies are at the highest level since 1996.
Falling behind in some cases on expenses like car loans.
Subprime borrowers were at least now 60 days late. It rose by 6.1% in September. That's the highest level since 1994.
A 28-year span. But what automakers are doing about this to offset these billions of dollars in losses is the biggest betrayal to Americans that we've ever before seen. Now today, the cars that we drive are basically like little mini computers. They absorb everything that we do, all of our information. Well, now car manufacturers like Ford, GM, and Tesla, they're taking this information, all of your driving habits, and selling it to a third party, LexisNexis, who then sells that to your insurance company. Whether you have Allstate, the General, State Farm, Geico, doesn't matter. They sell all of that data and information, and that's why your rates are going up. That's why maybe your policy just got canceled. What we're walking into is the game of survival of the fittest, the automakers and the auto manufacturers against America. And I believe we're going to see millions of people lose their vehicles in this great war. Please hit the like button, YouTube will share this content, to educate the people about what's going on in America's economy and auto market. And if you'd like to fix your credit, we would love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in a credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for tomorrow, for Monday. Take a look at this. So, automakers, tracking drivers, sharing data with car insurance companies. Automakers are collecting driving data from customers, quietly providing it to insurance companies, and the practice has resulted in some unassuming drivers seeing their coverage increased or even terminated due to the practice. So you think about that. Maybe you make that left turn you shouldn't have, that illegal right turn, because they'll know if it's an illegal right turn with GPS and all of this tech that they have now. You know, whether you accelerate too quickly or you hit the brakes too quickly, they sell it, right? They sell it, and you might pay an extra 10, 15, 20% a year. Maybe you don't pay anything. Right? Maybe you get your policy canceled. It'll be up to the insurance company. But when you see what's happened to, this gentleman here, you can see clearly where this is all going. New York Times reported this week that car manufacturers like General Motors and Ford are tracking drivers' behavior through internet-connected vehicles and sharing it with data brokers such as LexisNexis and Verisec, which create consumer disclosure reports on individuals that insurance companies can access. The consumer reports do not show where drivers travel, but they do provide information on length of trips, driving behavior such as hard braking, hard accelerating, speeding. Insurance companies can use those reports to assess the risk of current or potential customers and adjust rates or refuse coverage based on the findings. The Times highlighted the case of Ken Dahl, a driver of a leased Chevy Bolt, who learned he and his wife had driving habits that were being tracked when an insurance agent told him in 2022 that his report from LexisNexis was a factor in his premium jumping 21%. That's absolutely shocking. It felt like betrayal. They were taking information that I didn't realize was going to be shared and screwing with our insurance. The automakers and data brokers said they do not collect the information without consumers' consent, but many consumers are unknowingly agreeing to the data collection when they sign off on their disclosures without reading the fine print. A Mozilla report from September of last year sounded the alarm over auto manufacturers and privacy policies and pointed to car makers sharing drivers' data with insurance companies, law enforcement, as well as a slew of other concerns. So it's a big problem. So they mention here Ford, they mention GM, but if you look at Ford here, Ford, they just took a nosedive on their car prices last month. Ford Co. cut the price of their electric Mustang Mach-E as much as $8,100 as sales tumbled 51% in January when the automaker had to stop offering tax incentives on the plug-in model. 51%. GM slashes starting prices $6,000, right? Just came out last week. So you start to look at this, all of this is happening right now. It's all happening right now. Car values plummeting. Now, a lot of people are underwater on their cars. Americans are severely underwater on their cars. I mean, they said last year that it was March 2nd, 2023, that it was $5,500. Now it's close to $7,000. $7,000. And as we continue to see more car owners underwater on their loans, I mean, because of lower trading values, 1 in 5 trade-ins have negative equity, meaning they owe more than it's worth. Many buyers had to roll the outstanding loan balance from their old ride into their new vehicles. So it's going to be a game of survival of the fittest with American drivers. How many people are going to be able to afford the rising cost of insurance, the rising costs across the board, food inflation, and not have to give their cars in, considering that they owe a lot more on their vehicles than they're worth? How many have the incentive to prioritize that payment? I think not as many. I believe what we're going to start seeing here is a lot of people downsizing their vehicles, looking at things more from a survivability standpoint, trying to just get a vehicle in which they can actually comfortably afford. You know, a couple of years ago, people would get a car that they thought was really nice, that would, impress people on social media or their friend circle. But the next year or so is going to be getting from point A to point B. That's what I think. I think mopeds are going to become very, very popular here in America. A negative equity nightmare is rocking the used car market. Look at this. Negative equity sets new record in previous quarter. So you start to see how big this negative equity is. Now it's $6,763 that they reported in 2022. So at the end of 2022, it was $6,373. In the second quarter, it was $5,500. Now, what will be very, very fascinating is to walk into this scenario here. The used car market had prices at $46,000 at the height. $46,000 was the used vehicle price. And the average loan to value is 125% loan to value. So what that means is on a $46,000, and this is Kelley Blue Book as well, saying this, 125% loan to value. What this means is that you have a loan 25% above the price of that vehicle, and that used car price was $46,000. That would mean that it's an additional $11,000 added to this $46,000, meaning that the average person buying a used car at the height of the market was about $57,911 that they rolled into their vehicle. Taxes, tags, dealer fees, everything got rolled in. So you look at this, almost 60 grand, almost 60 grand. How many Americans can really afford a near $60,000 auto loan? I don't know how many. It doesn't feel like that many, but somehow, people, they're just leveraging themselves to the gills to try to make it happen. But with these record high interest rates is where everything is going to start to change. So right now, if you have a credit score of, let's just call it 700, you might be looking almost 10%, almost 10%. So an auto loan at that $57,000 payment, at that interest rate at 10%, you're looking at $1,200 a month, $1,200 a month, plus insurance, plus gas, plus maintenance, $1,600 a month, right? I mean, $50 a week for gas, that's $200 a month, plus this, that's $1,400, plus maintenance, plus insurance, probably $1,600, $1,700 a month. Like, that is insane. That is insane. What we're seeing right now is a lot of people just giving the keys back. It's exploding on Google Trends. They're trying to get out and escape from these payments. Now, 40% of Americans have an auto loan. 40%. And a traditional auto loan is about 5 years, right? You think about this. If 40% of Americans have an auto loan, and there are 100 million Americans that have an auto loan in general, right? So 100 million Americans, most of which took out their loan between 2020 and now. And you factor in what's happening, there's no way. I mean, look, 1 in 5 have a car loan of above $1,000 a month, 17.5%, so roughly 1 in 5%, right? Then you see this situation, the average cost of car insurance went up 26% in 2024. Here are the states with the biggest increase. Yeah, Missouri up 44%, New Jersey 45%, Rhode Island 42%, Colorado 36%, Nevada 27%. And they say that you've seen the cost of repairs, labor, medical costs, all of these things have been going up, and the cost of auto insurance premiums tend to trail the rest of the inflationary trends. So they say this plus everything that's happening, climate-wise is what they're saying. It's a big issue. It's a very, very, very big issue. And I think this bubble, this roughly $1.7 trillion auto loan bubble, is going to get pushed off the cliff with what these automakers are now doing to try to weather this storm. Right? This big betrayal that they're doing. We're going to see rates continue to climb. We're going to see repair costs continue to climb. We're going to likely, and unfortunately, see inflation across the board likely get worse. I mean, it's not going to get any better. Many people, in 2022 thought, hey, you know what, we're going back to 2019 pricing. Then in 2023, less people thought that. 2024, almost everybody realizes that the world's going to get more expensive. So if you see what's going on with insurance, you see what's going on with the American consumer, you see what's going on with the labor market, it doesn't take a genius to connect the dots that, there's a big problem coming for the car market. What do you think about this entire situation? What do you think about Tesla, Ford, GM, and all these car makers and manufacturers selling your information and your driving habits to your insurance companies? Drop below. Let's have a conversation about this. Please hit the like button. Hit the like button. YouTube will share the content, educate more people about what's going on in America's economy. If you'd like to fix your credit, we would love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for Monday. Catch you next video.